Welcome back. I'm Pratap here. Today is 10th January 2025. In this video, I'm going to evaluate the performance of high liquidity zones generated in our previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over 8,000 US dollars and we are providing complete free training. All the training lessons can be accessible at our NeoStock YouTube channel. At our channel homepage, you please click on the tab Posts. Some of you might be seeing the tab Community. So click on the tab, you get access to this free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other very important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. Yesterday end of the day report, we identified 11 high liquidity zones from daily and 75 minutes time frame. Out of these 11, 8 are daily high liquidity demand zones. So let us look into them one by one. First one is Adani Enterprises. This is a daily high liquidity demand zone. It is a drop, base and a rally. And this drop base rally is identified by our NeoStock software as a high liquidity zone. So this daily zone is fine tuned with the 75 minutes time frame. So let's go to the 75 minutes time frame. Here you have 75 minutes fine tuned order flows. So here we have a rally candle leg in. You have 1, 2, 3 base candles and with hidden body again a rally candle. And also here you have a rally candle. You have 1, 2, 3 base candles and again a rally candle. These two are 75 minutes zones. Within the 75 minute zones, again fine tuned with 15 minutes time frame. In the 15 minutes time frame, this is a failed ERC as a rally. You have 1, 2, 3, 4, 5, 6 base candles and a rally candle. This is the 15 minute zone. This is a rally, failed ERC as a rally, 1, 2, 3, 4, 5, 6 and rally candle. And also here also you have a medium size as a leg in and you have a medium size base candle and a rally candle, rally base rally. 15, these are the 15 minute zones. And these 15 minute zones again fine tuned with 5 minutes time frame. Look into the bottom one. Here you have a rally candle inside the 15 minute zone, rally candle, base candle and a rally candle. This is what we fine tuned and this zone is working like a high liquidity zone. It's keep on testing for multiple times. So several times it is tested. You can use this zone as a high liquidity until this is violated. You can plan as many number of trades as possible. What about here? Have you noticed here? We have a drop base rally, but I have a concern about this base candle because it is almost looking like a failed ERC candle. But definitely there is some order flow here. Why? Because see, this zone is also holding the prices. This is also working like a high liquidity zone. This zone is also. So that's why what I did in this area, this drop base rally area, maybe this is not really a 5 minutes base candle. But institutions created a lower time frame zone. So I went to the 1 minute. In the 1 minute area, exactly in that area, I identified an excellent drop, 2 base candles and a rally candle. This is acting as an horizon to this entire 75 minutes fine-tuned area. That is the reason why it is multiple times holding the prices. See, prices came and again moved up, again came, second time moved up, third time moved up, fourth time moved up. After that it is holding the prices here. And then again you see, fifth time again prices entered and again moved up. So this 1 minute zone is acting as a lower time frame zone, as an horizon to this, this is not 75 minute zone, this is the 15 minute zone. This is the 75, fine tuned 75. So this 1 minute zone is the horizon for this 15 minute zone. See, next time it pushed, how it pushed the prices. This entire daily zone formation is started from this horizon. That's why definitely we can plan a trade in this area. And today prices entered into this area. We got a trade with small entry buffer, okay. And the prices failed to reach the 15 minutes target. Go to the 15 minutes time frame. It failed to reach drop, base, drop. Only half of the distance only it traveled. But is it a successful trade? Yes, it achieved 1:3 RR. In fact, it gave you 1:5 RR, it has given, maximum return. I'm talking about maximum. If anybody aimed for 1:5 RR, still you would have achieved 1:5 RR. Okay, performance point of view, I am calculating up to this 1:5 RR it achieved. But in practical, where do you exit? Obviously, after reaching 1:3 RR, you might be using trailing 1 minute or 5 minutes trailing stop loss. And there you will exit. But here there is no 1 minute, 5 minute zones near to this. After crossing 1:2 RR, there is no 5 minute zone. So go to the 1 minute, where the 1 minute zone is available, the most recent. See, none of the 1 minute zones are violated here after achieving the RR. I mean 1:3 RR, somewhere here 1:3 RR might have achieved. After that, see, rally, base, rally. And then here drop, base, rally. And after that prices moved and now it completed 1:5 RR. Some people can exit because those who look for 1:5 probably they will exit here. And those who are looking for 15 minutes target, definitely they will hold. But this is the first 1 minute zone is violated here. Demand zone. So probably in this candle you might have exited this. This is the first 1 minute zone. This zone again holded, again pushed. Pushed up to 5 minutes supply zone, it pushed because a new 5 minute supply zone is created. Rally, base, drop. If it is 15 minute supply zone, we would have exited here. What is our hope? Mostly this 5 minute supply zone will be further violated and it reach 15 minutes target. Because most of our HLQ zones reach 15 minutes targets. But that didn't happen. Probably most of you people might have exited here when this 1 minute zone is violated. Based on trailing stop loss. If you did not exit, all your profits would have been gone. And those who exited 1:5 RR, they would have got the maximum profit. Anyway, performance point of view, I am calculating the maximum. But individual trades point of view, definitely you can't get the profit beyond that. That is what I am trying to say. The main goal of this HLQ zone analysis is identifying the performance of high liquidity zones. Has it been given minimum 1:3 RR to get success, to say it is a successful trade? Beyond that, it may give more profits. But practical point of view, some people may exit it after receiving 1:5 order. They get the maximum. But those who are aiming for this 15-minute supply zone, probably after the 1 minute, after achieving 1:3 order, any 1 minute trailing stop is violated, probably there you will exit. So this is the way Adani has a 1:5 order. Adani has given 13,620 rupees profit, which is 5.9% ROA, close to 6% our average intraday ROA. You got 5.92 or 93, something you got, but okay, 5.9. I rounded it to the nearest value. 5.9 ROA, which is 1:35 RR profit, this one. When I say achieved 1:5 RR means it failed to reach 15 minutes target. That's why we compromised up to 1:5 RR. Or if I say 1:3, we compromised up to 1:3. The yesterday's Axis Bank achieved only 1:3 RR. That means they failed to reach 15 minutes target. If I don't comment anything in the comment section, we achieved the 15 minutes target. That is how you should understand. So this is the maximum profit it has given, Adani Enterprises. After that, this zone is violated at 2 o'clock. If anybody would have taken the second trade, maybe your trade is stopped out here. But anyway, at least minimum one success we should get from the fine-tuned zones. After that, prices reached the next fine-tuned zone. This is also high liquidity zone. But when it reached at 15.5, almost closing hours. After that, market is completed. Maybe otherwise this drop might have been reached. Now market is over. That means this fine-tuned area, this is a high liquidity, fine-tuned 5 minutes high liquidity zone, because it is tested several times. Even this one also tested several times. Finally, its life is gone after it reached here. So this is about Adani Enterprises. The next one is Atul. Atul we already discussed earlier. We have this daily high liquidity zone. We have a rally, 2 base candles and rally, right? Sorry, something wrong here. Sorry, I opened a weekly time frame. Okay, daily time frame we have rally, 1, 2, 3, 4, 5 base candles and a rally. That is how our software identified this zone. Rally, base, rally. And this rally, base, rally we fine-tuned with 75 minutes time frame. And this we did long back. You might be knowing in the old videos, but anyway, we got the trade. Let me show you. We have a rally. We have 1, 2, 3, 4, 5 base candles and then a rally candle. This is the 75-minute zone. The 75-minute zone. Rally, base, rally. Within this 75-minute zone, we have a fine-tuned 15-minute zone. Here you have drop, 2 base candles and a rally candle. Drop, base, rally. Within this 75 minutes fine-tuned structure. And this drop, base, rally, we have a fine-tuned zone. You remember why we discussed this earlier. We didn't have a proper 5-minute zone. Go to the 5 minutes time frame. When I explain this zone, you will understand once I show you this stock. See here, we don't have a proper 5-minute structure. Do you remember few weeks back, maybe 2 weeks back, I think, if I am not wrong, or 3 weeks back, I explained a concept. 3 minutes zone could be a supplement to the 5-minute zone, but not replacement. On the day we discussed this stock. On that day I fine-tuned this particular stock with the 3 minutes time frame. Go to the 3 minutes. And that day we have drawn this zone few weeks back. And exactly on this zone today we got the trade. See here we have a rally base rally. And this rally base rally is working like a high liquidity zone. Not only high liquidity, giving sharp rejections by moving the prices away from the zone. I will show you in the daily time frame, you will see the rejections clearly. Or even in 75 minutes time frame also you can see. See the price from this zone moved and sharply moved. All these candles if you combine, this is like after testing this zone, a sharp move above. Such kind of zones, institutions keep lot of strong order flow. Always remember, the zone having strong rejection, mostly it will be giving you second test. Sometimes even third test, sometimes even fourth test. When you have a sharp rejection, any tested zone, always remember, if the risk is within your accepted limit, plan for the second trade. Don't leave that zone, it is a tested zone. When sharp rejection should be there. Such kind of zones, such kind of trades, definitely you can take second trade. You trust me. So previously also I told you. Even lesson 21 also we discussed. As part of aggressive trade I explained, but same concept applicable even for fine-tuned zones also. Sharp rejections away from the zone. Prices moving away from the zone with sharp rejection. Those zones are having a strong institutional order flow. Even the zone is tested, second time also it will work. Sometimes third time or even fourth time also it will work. Because multiple times it is keep on testing, it could be a high liquidity zone. But the first test we cannot say it is high liquidity, but still I am suggesting to go for second test if there is a very sharp rejection from a tested zone. Okay, first time sharp rejection, it is a tested zone. Don't leave that zone. Take second trade also. Mostly you get success. It's a very, very important point. Here, see, by seeing a 5 minutes candle, you cannot comment it is a sharp rejection. Probably by seeing 15 minutes or 75 minutes or daily candle, you will understand, because all these candles will be combined and form a single candle in the daily zone. That way you say price opened here and entered in the zone and sharply moved up. Anyway, I will be showing you, but before that this zone, this 3-minute zone, tested several times. See, this is again second test. See the sharp rejection from this zone. Again few candles came close, but again moved, rejection before the zone, and see how sharply prices moved up. Third time prices did not enter into this zone. And again one more test happened recently, but here also see, before coming to the zone, prices are moving away from the zone. Now I think this is the area. Once earlier we took some trade, if I am not wrong, with the entry buffer, or slightly we might have missed with entry buffer. But see here, when this happened on Wednesday, 8th January 2025. See, after that prices how sharply moved up. And see, today again we got the trade, but today what happened? This 3-minute zone is slightly pierced. But okay, it is pierced, but trade reached the target. It is within the stop buffer, slightly, just 5 paisa, something it is pierced, nothing more. Or maybe 10 paisa. What is the low of this zone? 6768, 65 paisa. And what is the low of this zone? 6767, 65 paisa. 68, 65. So almost 1 rupee, 95 paisa. But our stop buffer will be there for about 1.5 rupees or 2.5 rupees, because the cost is 6,000. Definitely some 3 rupees stop buffer will be there. Okay, anyway, this is a negligible, you can't consider. But next time you can't plan trade in this, because it is a pierced zone in this candle. Next time also this zone is tested. But if you, in case due to any reason in this candle, if you did not take a trade, then you can't take a trade in this zone. In the pierced zone you can't take. But still prices moved up. That's okay, but every time it won't happen. Okay, because the trade, this is at 10 o'clock 6 minutes, 3 minutes candle. You got the trade, and finally it reached at 11 o'clock 9 minutes, 3 minutes candle. Let me go to 5 minutes. You will see much better way. See, because it is a pierced zone, next time see prices easily moved out of the zone. But from here sharply prices moved. Maybe some 5-minute zone might have been worked. Maybe we may not be having a price action clue to identify that. That might have pushed the prices. The price action clue is there. We might have drawn a zone here. But this has given even much better profit. But anyway, we follow the rules. According to our rules, from the fine-tuned zone, we took the trade at 10 o'clock 5 minutes candle, and 11 o'clock. That means with less than 1 hour, the trade is completed, or within 1 hour, the trade is completed. We have a 15 minutes target here. We have a drop, base, a drop. So this is the area it reached. So how much profit Atul has given? But before looking to the profit, I told you I will show you these rejections in the daily zone, in the 75 minutes or daily time frames, so that you understand these rejections. See here, sharp rejection from this zone. But here candle is completed but continued from here. If it is a daily time frame, probably you will see those candles in much better way. See the sharp rejection. Here also you see. The moment it reaches sharp rejection up to this. But today that momentum is lost, because today the zone is pierced. But it was able to push up to 15 minutes target. That point you have to understand. Up to 15 minutes target it pushed, but not good enough. Now this order flow is no more useful now. Okay. But how much profit Atul has given? This trade from here to here, reaching the 15 minutes target. Atul has given 5,975 rupees profit, which is 4.9% ROI as per one futures margin cost. So this is about Atul. The next one is CAMS, Computer Age Management Services, CAMS. And this is also a daily zone, daily high liquidity demand zone. How we identify, how our software identified as a drop base rally. Drop base rally. In drop base rally, the lowest of the leg in, base and leg out is the distal line. So that's why till the drop candle we have drawn the distal line. But this is a drop base rally. This is how our software identified. And this one we fine-tuned with 75 minutes time frame. See here we have a 75 minute zone. This is a failed ERC candle. Maybe it is a failed rally candle and finally closed here. And two base candles and a rally candle. Leg-in base rally. This is the 15-minute zone. But I have drawn something here. Why? I will explain later. And then you have a drop, 4 base candles and a rally candle with even with hidden body. Even without a hidden body also it is a big candle. By adding hidden body it is a high explosive leg out candle. So we have two order flows, 75 minutes order flows. Drop base rally and here failed ERC candle as a leg in, as a rally, base rally. Dynamic view it is a rally. So both these candles, again both these zones I am fine tuning with the 15 minutes time frame. In the 15 minutes time frame, here you have a drop candle, 3 base candles and a rally candle. But have you noticed within this area, maybe this is the leg in as a rally, you have base candles 1, 2, 3, 4, 5, 6, 7 rally candle. So it's not a good zone. Mostly these kind of zones will be violated. Otherwise institutions should create a new order flow and then again they should push up. We have only two possibilities. But here, have you noticed I have drawn here a rally, base rally, 15 minutes with a hidden body, a rally candle. A 15-minute zone I have drawn. Why? Because aggressive trade setup with price action clue, pro gap. Because it is a 15-minute zone, if it is having a fine-tuned 5-minute zone, there are higher chances of getting success for this aggressive trade setup. See, many times we have seen 5-minute zone, we have a rally base and with pro gap there is a rally candle. And sometimes they are working, sometimes they are getting failed. Many of you also faced problems earlier. But if that 5-minute zone is a fine-tuned zone, probably it is having at least better success rate. Close to 80% success rate will be there. That aggressive trade setup. That's why I told you previously in a few weeks or few months back videos, I told you when you are using aggressive trade setups, at least use 2 price action clues minimum. Because single price action clue, sometimes you people are getting losses. So that's why I changed the rule. At least keep 2 price action clues. Here I have 2 price action clues. I have a fine-tuned 5-minute zone inside 15 minutes. And that fine-tuned 5-minute zone is again, or including 15 minutes, is a pro gap they are having. That way we can expect a strong order flow in this area. And moreover, this 75-minute zone is not having proper order flow. A little above, institutions might have added this strong order flow. That way we can consider. So that's why first I have drawn 15-minute zone with price action clue. I didn't directly go to 5-minute zone with price action clue. 15-minute zone. Now go to the 5 minutes time frame. In the 5 minutes time frame, here now again you have a fine-tuned 5-minute zone. We have a rally, base rally. The price action clue. With the pro gap. Got it? Okay. And anyway, we know this zone will be violated. 15 minutes itself we said. See, so much of consolidation, all these base candles. Definitely there won't be any institutional order flow. All their order flows, because supply demand is equal. There is a big fight happened. When a big fight happens, the bulls orders will be reduced and bears orders also will be reduced. So you can't expect a huge strong order flow here next time when prices are entering here. Okay, and what about this 15-minute zone? Here we have again drop, 2 base candles and rally. Apart from that, this entire daily zone is having lower time frame horizon. Look into this 5-minute zone. Rally, base, rally. This rally, base, rally is the horizon for this entire daily high liquidity zone. A lot of time prices have been moved here. Still this is the horizon holded the prices. Why? Because every time institutions are creating, see here, rally, base, rally. Again drop, base, rally. So that is the way they are handling here, rally, base, rally. And now institutions created this 15 minutes by picking the order from here. Now it is having a 5-minute zone. A new orders again added institutions and a rally, and again with pro gap a rally. So definitely this is going to be strong. So now we have 3 order flows. One is 5-minute horizon, and another one is this 15 minutes horizon, and another one is the 5 minutes as a inside 15-minute zone as an aggressive trade setup with pro gap. See today what happened? Prices first entered into the fine-tuned 5 minutes pro gap area, the aggressive trade setup. It gave a trade and finally reached the 15 minutes target. Let's go to the 15 minutes time frame. Here you have a failed ERC candle drop as a leg in, base drop. After that we got the trade, and this newly created 15-minute zone we have to keep as a target, and finally prices reached the target. And when you got the entry at 10 o'clock, let me go to 5 minutes. So you got the entry at 10 o'clock 5 minutes, and when it reached the target at 11 o'clock 15 minutes. So within 1 hour 10 minutes the trade is completed. How much profit CAMS has given? It has given 8,725 rupees profit, which is 6.6% ROI as per one futures margin cost. This 15 minutes aggressive trade setup inside daily HLQ zone, price action clue pro gap. And after that again prices came. This time if anybody would have taken second trade, maybe your trade would have been stopped out. That is okay, because already it gave a good success. And after that this zone is violated and prices entered into this 15 minutes area. The 15 minutes area is pierced. Why? Because we've been clearly told this 15 minutes area there is no proper institutional order flow. Easily this zone will be violated. That is what happened. Prices came and again from started and again came. This zone is violated. Probably the last 5 minutes candle. That's why some kind of profit booking might have everything. So slightly it moved. Now this 15 minutes is gone. Now we have this remaining 2 order flows are there. The fine-tuned 5 minutes order flow. This is the one. And if this is violated, below we have the 5 minute zone as an horizon to this entire daily high liquidity zone. But as per our HLQ zone strategy, we got 6.6% ROI we got. Our average ROI is 6%. We got another 0.6% extra we got from this stock by using the 15 minutes aggressive trade setup. So this is CAMS, and next one is Canara Bank. Canara Bank, I have to explain an interesting topic here. I am not considering this is a HLQ trade setup. Please remember, this is not a HLQ zone concept. This is a revision of pierced zones you land earlier. It's another special scenario. Say exactly the same scenario we discussed in which stock? Sorry, I forgot the name. Laris Labs. Do you remember the Laris Labs? The daily supply zone, we have a 1 minute zone, 5 minutes high liquidity zone. Once that is pierced, institutions exactly the same area they created a 1 minute zone. That 1 minute zone holded again several times. After that 1 minute zone is violated, again the same area institutions created again a 5 minute zone. That 5 minute zone holded the prices. Nearly 10-15 days we have seen prices were moving. How many of you remember? And a few trades also we took, because we have 5 minutes aggressive trade set up earlier. Laris Labs. Again from this, see the 5 minutes high liquidity supply zone trade. Similar situation now we are seeing in Canara Bank also. Of course, it is not a HLQ trade setup, but I want to focus on this because recently you land lesson 28. The new order flows in the pierced zones you already land. In that new order flows, this is a special scenario. Why special scenario? Immediately they are creating the new order flow soon after the zone is violated. Not the entire zone, the fine-tuned zone. Generally we talked about the daily zone violation or weekly zone violation, pierced zones we are focusing. But here, within the high liquidity zone, the lower time fine-tuned zone is violated, or maybe lower time frame high liquidity zone is violated. After violation, again institutions are creating new order flows. First of all, this is a daily high liquidity zone. This daily high liquidity zone is having a high liquidity zone here, 5 minutes time frame. First let me go to 75. 75, there is no proper structure here. Because all these structures are pierced. So you can't make use of that. Here few candles are there, but completely they are going, the fine tuned is going out of the zone. So this is the area I didn't have any interest. So what I am trying to tell you, directly go to the 5 minutes time frame. There is a 5 minutes zone acting as a high liquidity zone, because that is tested multiple times. See here you have a drop base rally, a zone is there. Prices move and again came close to the zone and again more. If anybody would have planned this as an aggressive trade setup, it might have worked very well in the past. I am not talking about now, because this is almost a year back. That is 31st January 24. January or June? 31st Jan. Almost a year back. See, after that again prices came almost near to this zone, but not very close, good enough to plan the trades from this candle. See, after that again prices came. With entry buffer you will get the trades here. Just almost they touched. With small entry buffer you would have got this trade. Gave a very good profit from here to here. Again at the closing hours of the market they came very near. And then again started moving up. And now what happened? This zone is pierced. When 21st November 24. And within that area immediately what institutions has done? They created a drop base rally. This zone is not violated completely. It is pierced. See, none of the candles are closed outside the zone. Probably this could be within the stop buffer, or maybe stop buffer slightly might have been violated. Maybe. But whatever it is, this zone is still pierced zone. Now what institutions has done? Exactly in that pierced zone area, again they created a drop based rally, and today we got the trade from this zone. Today we got the trade. If anybody would have taken this trade, it could have been a huge profit. And when this zone was created? On 21st November 24, 2 months back, or 1.5 months back. See, today what happened? Prices entered into the 5 minutes area. Maybe a small entry buffer you might have added. That is good enough. What is the high of this candle? 92.84 paisa. 92.84 is zone high. And what is the low of this candle? 93.29 paisa. Sorry, I made a mistake. 93.26 is the high of the zone, not 92. 93.26 paisa. And the low is 93.29 paisa. 3 paisa buffer or 4 paisa or 5 paisa buffer is good enough for you to plan your trade in this stock. Let us assume somewhere here, if you would have kept an entry, see the huge profit it would have given you. So what is the low of this zone? 95.54 is the low of the zone. That could be your target. Minus, what was the entry? The blue color line with some entry buffer, 93.32 paisa. You would have got 2 rupees 22 paisa profit. How much profit we would have got? This is a pierced zone strategy. What you learned in lesson 28, lesson 28. And a similar example we discussed Laris Labs a few weeks back. Every day we were getting Laris Lab. Every day continuously 10 days Laris Labs has given. That was the starting point. I started explaining you the importance of the pierced zones. And at the time I announced, soon you will be learning pierced zones. You will be learning the strategies. Continuously we monitored the pierced zone. Some 10-15 days, almost every day. From the pierced zone, new zones are getting created and giving new trades. At the time you didn't learn lesson 28 concepts. Maybe you may not be having a very serious focus on that topic, because complete understanding, maybe something is happening that you might have noticed that within the pierced zones. Now you learned pierced zone, third strategy, new order flows within the pierced zone area. But we referenced from higher time frames point of view. Within that concept, the variant is fine-tuned areas. These kind of things will happen at 5 minutes level. That you have seen in Laris Labs. These are all the extensions to the concepts you learned. And now you are seeing similar to the Laris Labs example, you are seeing in Canara Bank. So what could be the profit in case if anybody planned the pierced zones? What's happening? Net is down. Okay. See, 6750 is the lot size, and margin cost is around 1.5 lakh. So 2.22 into 6750, you would have got 14,985 rupees profit. That means close to 15,000 rupees profit. Into 100 divided by what could have been some roughly the value could be. Okay, prices also closed in this area, same area. Let me take the same value almost. 1,51,000 rupees. 1,51,000 rupees. Your margin cost, you would have got 9.9% ROA you would have got. Within how much time it reached? Your trade would have been at 10 o'clock 5 minutes and reached the target at 11 o'clock 15 minutes. So 1 hour 10 minutes. So this is the power of the piercer zones. Once again this 5 minute zone is once again it is violated, not violated, pierced. Now it is completely violated here in this candle because this candle is closed outside the zone. This 15 minutes, maybe tomorrow, who knows, institutions again may create a new order flow, again push the prices within the same area. That possibility is there. If that is the case, within the same area, institutions will be adding new order flows and it may give you multiple trade opportunities. But you need to focus very closely, continuously next few days. What is happening, how institutions are creating. Sometimes they play. And according to us, these are all violated zones, we don't focus. But institutions, they make sure their order flows will be executed without any disturbances. So this is about Canara Bank. Anyway, this is not a HLQ zone trade setup. So I am not, because our focus is fuel. Of course, zone is HLQ zone only. But trade setup, the piercer zones concepts, I did not add it as part of HLQ zone trade setup. Because you need a lot of experience to understand the piercer zone scenarios. But all these examples are just to help to improve your experience. Okay, next one is Grasim. Grasim gave 2 trades. This is a daily high liquidity zone. See, multiple order flows are there in Grasim. Each order flow we got the trade. This is the first trade, this is the second trade. Third trade anyway we can't take because it is almost closing hours of the market. So this is a daily high liquidity zone. Grasim, how our software identified? Our software identified as a rally base candle, and our software consider this candle as a medium size candle as part of the base. And then our software recognized the imbalance. Actually, imbalance is changed to balance is changed to imbalance from this candle itself. But this is not good enough to consider imbalance is started for software programming point of view, because both are within the same narrow range. Now the imbalance continued, immediately our software recognized the imbalance, and that way it identified these two are part of the base. In fact, that is correct, that is perfect. It compared to human point of view. Why? If you considered only this candle, today you would not have got all these trades. Software recognition point of view is much perfection, because the order flows institutions kept here. Those order flows gave the trade. If you would have drawn the zone rally, base, rally, and follow through candle, that way you considered, within this area, this base candle area, you won't be getting any trades today. You would not have got any trades. See how cleverly our software identified. Within this, in this candle area, we have all the order flows. And according to the software calculations point of view, this is not a rally candle. This is a medium size leg candle, not a large candle. You may say this is also not a large, almost same size, but imbalance point of view. Now order flow is completely coming out. Now this is a leg out according to the software point of view. I already explained these imbalances in one of HLQ analysis old videos previously. Old means within a last 1 month videos. You can find that video in the important strategies and playlist, important strategies and analysis playlist, or important analysis and strategies playlist. Okay, whatever the name it is, in that playlist you have a video with the heading imbalances. Already you learned in lesson 2. But same concept I explained in with detailed, so that by this time you completed the course. Now you understand the real essence of lesson 2 in that video, in that special HLQ analysis video. So please look into that video. Developing software based on that is important, based on imbalances. Just if you simply follow 50% candle and if you close, because I have seen some people developed scripts in TradingView. TradingView, there is a concept of boring candle, something is there. They added the scripts and drawing the zones, but every zone, they are missing many of these zones. Those TradingView scripts can't identify such kind of zones. But institutions keeping the strong order flows in such kind of zones only. Drawing the zone in TradingView is not important. What is important? Identifying the right zone, having right institutional order flow is very, very important. Nobody developed such kind of software. We are the first people in the entire world developing such an advanced software for supply, demand, zone, price action. That's why we are all enjoying all these profits. Okay, this one is fine-tuned. This is a daily zone, rally, 2 base candles and rally. That is how our software identified. And this one fine-tuned with 75 minutes time frame. We have multiple order flows here. We have a rally candle. We have 1, 2, 3, 4 base candles and a rally candle. Rally, base, rally. Here the most order flows are there. And within this rally, base, rally, this is a dummy order flow, nothing. No order flows are there here in this area. See, we didn't fine tune. That means 15-minute structure is not good in this area. And this entire thing is part of the medium size leg candle. Our software kept that medium size leg candle in the base. That candle is having the actual institutional order flow. And the special algorithms in our software identified that candle and kept it in the base. Now you got trade opportunities after you fine-tune that entire area. See, this order flow is part of the first base candle. This order flow is part of the second base candle. Actually, that is a medium size leg candle. Now go to the 15 minutes time frame. See the order flow here? Not at all good. No proper structures here to consider leg in and leg out candles. Even if you consider this is rally, base, rally, and this is pierced in this candle. Even all these candles are some kind of consolidation is taking place here. It's not good. So we have to leave this. This will be next time when prices enter, this zone will be violated easily unless institutions creates a new order flow and push the market. Otherwise, this area will be violated. But see here. Here you have multiple order flows. You have a rally candle. You have 1, 2, 3, 4 base candles. And then a rally candle, follow through candles. Basically, imbalance started from here. To be honest, imbalance started from this failed ERC candle. But okay, this size is not very big. I kept it part of the base. this entire thing. Rally 1, 2, 3, 4, and then this is the rally candle. This is the first 15 minutes area. Second 15 minutes, rally, you have 1, 2, 3 base candles and again a rally candle. Apart from that, here you have a rally base rally is there. This is the LTF, lower time frame zone, as an horizon to the higher time frame, that is the 75 minute zone. But I didn't draw 15 minute zone because structure is not very clear here, because this candle is not really a very good candle. Some doubts can consider, but I ensured 5 minutes having an order flow there. In the 5 minutes I have drawn. Actually this zone is from 5 minutes time frame. So that way we have 3 order flows, and this order flow is the LTF as an horizon to this entire 75 minute zone. So go to the 5 minutes time frame. Now you have the fine tuned 5 minutes. So here you can draw a rally, 2 base candles and a rally. But have you noticed, instead of drawing the zone like this is a type 1 proximal. Instead of drawing like this is a type 2 proximal. Now I have drawn like this. What does it mean? It is a type 3 proximal. Why I have drawn type 3 proximal? So that this entire order flow is within this high liquidity zone. What is the advantage? You get a chance to reduce the risk and get better RR. Nothing else. Anyway, this is at the within the entire daily high liquidity zone area. This is actually, this order flow is at the proximal line of the daily zone. Okay, next we have a rally, 1, 2, 3, 4, 5 base candles and a rally candle. Rally, base, rally. Another fine tune. And see here you have a 5 minute zone here. You have a drop, you have 1, 2, 3 base candles, rally. This is I consider this as a failed ERC. Or you can consider this also rally, 1, 2, 3, 4, 5, 6 base candles, rally. That way also you can consider. But okay, for me, because a lot of balancing took place here within these 3 candles. That's why, see how I am observing this price action. That way you have to observe the same thing. I consider, because here price moved in a balanced way within these 3 candles. That's why I consider this as a drop candle, as a leg in, and these 3 base candles and a rally candle. And this 5 minute zone is overlapped with this entire 75 minutes high liquidity zone. That means this is the lower time frame zone as an horizon for this 75 minutes fine tuned zone. Not only that, you see, this zone is also behaving like high liquidity zone. Why? Rally base rally created. Again drop base rally, but not a great leg out. Here again rally base rally. All these things are happening by taking the order flows. Every time what institutions are adding, by creating drop base rally, they are adding new order flow. Again drop base rally, they are adding new order flow. Again rally base rally, they are adding new order flow in this area. See again here, drop base rally. Again they added new order flow in this area. Every time it is testing, not only it is testing, institutions are adding new order flows in this area. That way more and more liquidity is getting added into this zone. So that way this is also not only an horizon, this is also a high liquidity zone. Definitely this is the area we have a strong order flow. So this is how I analyze and I draw the zones while fine tuning. I expect you people also think in the similar directions. Okay, today what happened? Before today, anything happened? Any of these zones are tested? Let's verify. No. Today only the prices. Okay, when prices are entered, what is our 15 minutes target? This is not a 15 minutes target, this is a new target. This is a newly created, but before this zone is creation, we got a trade here. Here we have a trade. Here we have, a zone, not a trade. Sorry for the mistake. We have a zone here. 15-minute supply zone. This 15-minute supply zone is the target for this entry. But has it reached this 15 minutes target? No, it did not reach. After that, second time prices came, this time this is violated. First of all, we can't take second time trade because first time itself this is pierced. This fine-tuned 5-minute zone is pierced. But it is within our stop buffer. And then prices moved. Maybe that is one of the reasons why it is not having enough strength to push up to the 15 minutes target. But this is a successful trade because it is achieved 1:3 RR, 1:3.03. From this fine-tuned 5-minute zone till this area, 1:3 RR. So beyond 1:3 RR, few paisa went outside, but okay. Exactly 1:3 RR we achieved. 1:3.03. That means 1:3. That's why we are saying this is a first trade is a successful trade. All those members who exited at 1:3 RR level, you would have booked the maximum profit that has given in this stock. But those who are waiting for a 15 minutes target, definitely your profit margins will be reduced. Either you have to exit at a 5 minutes trailing stop or you need to exit at 1 minute trailing stop loss level. Is it having any 1 minute trailing zones near the 1:3 RR level? See here we got the trade. And we don't have any 1:3 RR. We don't have any 1 minute zones here. The 1 minute zone is here only, near to the zone. Here we have 1 minute zone. If you exit here in this candle, you won't get either profit or loss. Those who missed 1:3 RR. Because here we got the entry. After that, prices sharply moved and it doesn't have. But while coming down, once again a new zones are created here. We have a drop base rally. Not only here, we have a drop base rally again created. But one option is there. A new 15 minutes zone is created here. Let's go to the 15 minutes. Here a new 15 minute zone is created first time. After that, prices might have reached this 15 minute zone. At the time you might have exited in this candle, because 5 minutes candle they are clear, 15 minutes candle they are not clear. Maybe in this 15 minutes candle only, while creation only, prices might have entered this zone. You may not be knowing at the time this is a 15 minute zone. But anyway, let's go to the 1 minute time frame. See, before reaching this zone, this is the drop base rally. This is not violated. Any new drop base rallies are created? Yes. Here we have a rally base rally is created here. Again, this is not a leg out candle. This is okay. And here this is violated. This is the first 1 minute zone is violated. Probably this is also violated here. Yeah. We have a demand zone because it's not visible. Let me change supply zone color. Actually, this is a demand zone, not supply zone. Just to tell you, here it is violated. Maybe you would have exited in this candle. Somewhere here, maybe you might have kept some stop buffer. Let us assume somewhere here you might have exited our trade. Those who are using trailing stop loss. So that means your profit could be from here to here only, because it failed to reach. Sorry, I made a mistake. I was doing a wrong area. I'm analyzing. Actually, I'm analyzing the second stock. Second stock already reached the target. I'm supposed to analyze this area. I'm sorry for my mistake. I was analyzing this stock. Let me hide this data so that. Okay, now you see, after reaching this 1 minute zone, 1:3 RR is achieved. While achieving 1:3 RR, is there any zone created here? Yes, near the zone we have a drop base rally is there. Let us draw this zone. Drop base rally. This is the demand zone. Okay, this one is violated. Here you would have exited your trade. Some stop buffer you might have kept below the 1 minute zone. Let us assume somewhere here you exited approximately. Those who achieved 1:3 RR, some of these candles you might have exited, one of these candles. So in this candle 1:3 RR is achieved. You might have exited here. Those who are using, who are waiting for this 15 minutes target to reach, here your first 1 minute zone is violated after one is achieving, probably you might have exited here. In case if you are keeping a zone somewhere here, because you don't want very close, sometimes what happens, because these are the 1 minute zones, sometimes maybe one zone might be violated sometimes. So any second zone near to that, probably instead of this blue color line, maybe a little below, let me add, somewhere here you might have exited, because the two 1 minute zones are violated. When two 1 minute zones are violated, 1 minute trend is changed to downtrend. No other option for you. Sometimes you may give excuse after first 1 minute zone violation. You may think the trend is changed to sideways, and again trend will be violating 1 minute supply and change it to uptrend. That kind of hope might be there sometimes, because it is very, very close to 1:3 RR. You may think maybe prices will come down and again it will go up. That way you may think. So when second 1 minute zone is also violated, which is near to the first 1 minute zone, then definitely you must exit here. There is no other option. That is one option. Or another option, here you have some high liquidity kind of 1 minute zone is here. If that is violated, you can exit that also. That way also people can use strategies, different strategies. See here. Here you have a zone. This is multiple times holding the prices. See, first test, second test, but now it is violated. Below this you might have exited. But remember, when you are moving down and down, you are very close to your entry and your profit margin will be reduced. If this is the case, this is only your profit margin. From here, this is the entry, right? And here you will exit. Your profit is reduced. But imagine if you would have exited in the first 1 minute zone violation after achieving 1:3 RR. Now your profit is from here to here. Maximum profit you would have captured. Why I'm explaining? Because some people may not be knowing the exit criteria. Still hoping when to, after reaching 1:3 RR, you will be believing prices reach 15 minutes target. Sometimes they may not reach. So when to exit, people may not be knowing. That's why I'm giving this explanation. Practically how you think to capture the maximum profit. Because sometimes exit at 1:3 looks like foolishness. Sometimes. Why? Because after that prices again further moving and reaching your 15 minutes target. Because many times 15 minute zones will be violated. That is the reason why after 1 minute, after reaching after reaching 1:3 RR, you will be looking either 5 minutes or 1 minute zones. If near to the 1 minute, if 5 minute zones are there, you will give priority to that 5 minute demand zone violation, if it is a long trade. If there are no 5 minute zones, they are very far away, or no zones at all, in case there is no other choice, near to the, after reaching 1:3 RR, near to that 1:3 RR, whichever 1 minute zone is there, that 1 minute zone you will be giving importance. If that is violated, you will exit based on the trailing stop and book the profit. In case if that is not violated, anyway prices will be moving further up. You will be adjusting your trailing stop loss, and without violation of any 1 minute zone, if it reaches 15 minutes target, you will exit in the 15 minutes target. So this is the reason why always I consider 1:3. If our trade is reached, I am considering it as a successful trade. These are the reasons behind that. Okay, fine. This is the first trade. We got the trade. The zone is pierced, but still it is within the stop buffer. Still it achieved 1:3 RR. So that way, first trade Grasim has given a profit 4,850 rupees, which is 4.6% ROI as per one futures margin cost. See, I have written the comment, achieved 1:3 RR in the daily HLQ zone. The fine-tuned 5 minute zone achieved 1:3 RR. That means it is not able to reach this 15 minutes target. Okay, after that what happened? Okay, we achieved 1:3 RR. After that, a new 15 minute zone is created, rally base drop. That's why previous one is deleted, because your reference will be from this. Already we exited our trade. Why we are drawing? Because again we may get another trade opportunity in the next fine-tuned zone. Anyway, first fine-tuned zone you can't take the trade because it is already pierced. You can't take second trade. But below that you have another fine-tuned zone. That is what you have drawn here, right? The fine-tuned zone below this. You have a 15 minute zone. You have a rally, 3 base candles rally. Within that you have a fine-tuned 5 minute zone. Now this zone is enabled. This order flow is enabled now. This rally 1, 2, 3, 4 base candles, 1, 2, 3, 4, 5 base candles and rally. This order flow is enabled now. But very interesting here, one thing is risk is high in this area. That is one thing. Until the new 15 minute zone achieving the target, RR is not there. From this zone, see, this is my entry, right? If I keep my entry here, what is the RR I am getting? 2.16 RR I am getting. See, before prices enter itself, you need to plan your trade. Because you know, in this, after this candle, you know that a 15 minutes zone is created. Immediately you have to draw the zone, and this is already pierced. You can't plan trade in the pierced zone. And then below that you have one more order flow. Till that order flow, if you are planning your trade, you are getting only 1:2.16 RR, you are getting 1:2 RR, you are getting. But what is the minimum RR you want till this 15 minutes target? A minimum RR should be 1:3. That's why what I am doing, I am adjusting my entry, reducing the price. See, I am moving it down, further moving it down. Now you are getting 1:3 RR. Got 1:3 RR. So where exactly you need to take your entry? your entry should be at 2358.25. I just added 2358.30 actually. This is 1:3 RR. This is how I planned. 1:3 RR. The entry is 2358.30 paisa. And is price reached to this level? See the low of this candle? 2358.25 paisa. Even 5 paisa inside prices went. That means your trade is executed. Your trade is executed. And the price is entered, and finally price has reached the 15 minutes target. Generally you exit with before a small buffer, you keep and you exit. So almost close it reached, slightly missed, but okay, that is okay, fine. It is acceptable as a success. So till high of this candle, from our entry, whatever entry, that 30 paisa, 2358.30 paisa, till the high of this candle, whatever the profit, that profit I captured. This is the opportunity given by our high liquidity zone. Remember, it need not exactly touch 15-minute zone. Sometime before itself, because if the order flow is very strong, supply, before itself it will turn down and it will. That's why many times what we say, always I suggest you keep some buffer below this target zone and exit your trade. Or after reaching near to this 15 minutes target, if you are aiming more profit, even more, again you have to start using trailing stop. If any trailing 1 minute zone or 5 minute zone are violated, you will exit. Otherwise, you will try to book more profits. See, all these techniques you have to apply in the real trading. This is only about performance evaluation of our high liquidity zones. How well they are working, only we are verifying here. All these trades are not our trades. These are the opportunities given by our software. Every day I am checking how well our software is working. Software provided zones. Software provided zones as per the HLQ zone strategy I explained in lesson 21. In lesson 21.3, I explained HLQ zone strategy. I think third video of lesson 21. So that strategy, how it is working, every day we are checking, because I'm claiming 80% success rate should be there for this particular stocks. We've been monitoring for the last 1 year, 3 months. That is last year October onwards, we've been monitoring continuously. Last year means not last year, before last year, that is 2023, October. Okay, so how much opportunity it has given? Grasim second trade, it has given 5,925 rupees profit, which is 5.6% ROI. So that way we got 2 successful trades from Grasim. See, everything is price adjustment based on the RR. If RR is not there, you have to adjust your entry. While adjusting, sometimes you may miss the trade. But no other choice. Without RR, you can't take the trade. If after adjusting, if prices entered into your adjusted entry, you will be lucky, right? You get a trade, and if it is successful, you get the profit. Without adjusting, if you reject, anyway, even if the prices are entering more deep, you will be missing the trade opportunity. That's why this adjustment is very important. 2 advantages we get by adjusting. One thing is you get RR. Second thing is your risk is reduced now. That is also very important. After that again prices came and almost they reached, I think slightly this zone is also pierced. Next time you can't plan a trade in this area, unless you have a new fine-tuned 5-minute zone. Slightly pierced and again moved up, but we can't take a trade in this zone at this time, because prices are already entered into the last 1 hour of the market. If anybody planned a trade last 1 hour by taking even more entry till 5-minute zone, it might have been achieved. See, here you have a 5-minute zone, that should be your target. Let us assume some of you planned a 5 minutes trade, because now market is almost closing hour. But where is your target zone? Last 1 hour or 1.5 hour, your target should not be 15 minutes zone. Your target should be 5 minutes zone. Do you have a 5 minutes candle? Yes. You have a drop, base, drop. This is your target. Let us assume how we plan. Before prices enter into this zone, this drop base drop is completed. We know market is now entering into last 1.5 hour trading. Prices are entering in this zone, and before entering itself, once this new zone is created, immediately you should plan in such a way. See what I am doing, observe carefully. I am clicking this long position tool. I am placing it here. I know my stop loss is here, this line for this zone, and my target is in this zone, and my entry is in this zone. Here. My entry is in this zone. What is the RR I am getting? 1:1 RR I am getting. But what is the minimum RR I should have? 1:3. So what is that I have to do? Adjust the entry. I am moving the prices down, moving the prices down. Now RR is increased to 1.96. Now further moving, further moving, further moving. Now I got exactly 1:3 RR. If in this level prices enter, then only I take my trade. Otherwise I don't take the trade. Okay, price entered into this zone. Yes, exactly at 2 o'clock 30 minutes candle, prices entered into this area. Now this is only my risk. And this is the stop buffer area, and this is my within the zone. So my price entered and reached stop buffer slightly, maybe a 5 paisa, 10 paisa it might have pierced. And now what's happening? Prices were started moving, and finally reached the target. Here I would have exited my trade. Somewhere here, some small buffer I keep. Somewhere here I will exit. Something like this. Maybe if you want to exit, if you want to still fine tune, you can keep like this. Maybe I would have kept here. See, I got exactly 1:3 RR till this blue color line. I ensured at least 1:3 RR. I got the entry in this candle. After that reached, how much profit you would have got in Grasim? So this is our target, 2370.65. Minus, this is if anybody planning to trade during the last 1 hour, I am just telling you the technique, how we would have planned the trade. So we would have got 15.6 rupees profit. Your target is 2370.65 paisa and your entry is 2355.05. This is a 5 minutes target. Remember, this is not a 15 minutes, because the last 1 hour you can't plan 15 minutes targets. If really it achieved 15 minutes, you are very lucky. And till this 5 minutes zone, we have RR is there. That is lucky. Lucky that we got RR. And lucky that our entry, fine-tuned entry prices reached. And lucky that our trade is not stopped out. Of course, always luck has to be favor a little bit, so that our planned trades won't be stopped out. And prices reached. But already it is a tested zone. Even then, why we took the trade? Because this zone is having a strong order flow, very big. See, from here to here. There are higher chances that it may give second trade also. So where is your previous trade? Here. Below only you have to plan your second trade. So below the previous only we planned. But why we went even more further below? Because to get the 1:3 RR till the 5 minutes zone. So today everything is favored in our favor. If you would have planned our intraday, how much profit you would have got? Grasim. 250 stocks, 1,05,000 rupees, around 1,05,000 rupees is our margin cost for one future. 5.6 into 250. You gained 3,900 rupees profit on one future margin cost by investing around 1,05,000 rupees during the last 1 hour of a trading session. And your trade is at 14:30. And your trade reached the target at 15:10. So in 40 minutes, you got this profit. So what is the ROI you would have got? Into 100 divided by, because price is closed near to this, so somewhat a small current value, small, maybe 1,05,000, maybe 300 rupees might be there, approximately. So divided by 1,05,300 rupees, because current price is 540, maybe 200 rupees below or 400 rupees below might be there. But anyway, I added a small deduction only. You would have got 3.7% ROI during last 1 hour of the trading session. Already you got 4.6 ROI, another 5.6 ROI. Apart from that, before closing the market, if you would have planned intraday trade, because 5 minutes target is intraday trade, still Grasim gave you one more trade with 3.7% ROI. So many order flows are there in Grasim today. And moreover, you may ask a question, why we have taken a trade even second time also in this area? What made us to take the trade? The answer is here. What is this 5-minute zone? This drop base rally is not a fine-tuned zone. This is a lower time frame zone as an horizon to this 15-minute zone. Sorry, not that one, this one. This is a fine-tuned zone only. Sorry, I was thinking this one. Sorry for my mistake. From the second zone only we are taking. Okay, fine. The only reason is the risk, the order flow is bigger. Not that LTF. I was thinking this is LTF zone. Sorry. LTF zone, again and again we take trades. And fine-tuned zones we can take if prices don't go deep inside. You see, they didn't go very deep. They went a little bit inside and moved up. Now prices went deep, slightly pierced, and now it is no more valid next time. But anyway, we didn't plan any trade here. I'm just trying to tell you, still it would have given you an opportunity, intraday trade opportunity during last 1 hour. Some of our members trade during even last 1 hour also, because previously they sent me the screenshots of their last 1 hour trades. Okay, this is about Grasim. We have two successful, our HLQ zone trades from Grasim. Next one is LIC. LIC we didn't have any trades today. This is a daily zone. It doesn't have any proper fine-tuned zones except 75 minutes. This is a rally-based rally our software identified. If you go to the 75 minutes time frame, 75 minutes time frame, we have one valid zone. This is a failed ERC as a leg-in. You have 1, 2, 3, 4 base candles and a rally candle with hidden body. And you can't plan this a drop base rally because this is already violated in this candle. That's why at present this is the only one order flow open. But unfortunately, if you look into that order flow, you know that zone will be easily violated. Look into the candles. hide this gap, you will understand. See, you have a rally, base, drop. After drop candle, you have a rally candle, no base candles in between. So this is the reason why I didn't have any interest on this particular stock. Today just touched the zone and moved up. Next one is a National Aluminium. It's a very interesting. It is a pure price action clue based trade. And this candle made me interest on this particular area where it was tested earlier. Why it made me get some interest? See the rejection, huge rejection. When a stock is having a huge rejection, even if it is having a fine-tuned zone tested, still I can plan another trade. Previously also I told you, sometime before, when I explained. See, this is a classic example. When a huge rejection is there, this is a daily candle. So this is the area, definitely I want to plan another trade in this area. Exactly where it tested earlier, same area. If the risk is within our accepted limit. That is important. Okay, go to the 75 minutes time frame. Here we have two order flows. One is a drop, base, rally, and another one is rally, base, rally. Okay, within these two order flows, again 15 minutes time frame. You have a drop, base, rally. You also feel rally, base, rally. But I am not considering this because this is picked up the orders from here and again moved. That's why I am not giving much importance here. This is the origin. Rally, drop, base, rally is the origin. And here you have drop, two base candle, medium size leg also part of the base, and rally. That means drop, three base candles and rally. 15 minute zone. Now in the 5 minute zone, very interesting. We have two order flows. One is at the 15 minutes proximal line and another one is at the 15 minutes distal line. So this is the 15 minute zone. 15 minutes distal line, before that we have a rally, base, rally. Probably this is the origin. This rally, base. You can also draw like this, two base candles. Rally, base, rally. But I considered to a single one. Because this is the 5 minute zone. And this is the origin is, see every time prices entered and reacting. Again entered, reacting. Moving up. And from this prices moved up, again entered into the 15 minute zone. Now institutions created a rally, 1, 2, 3, 4, 5 base candles rally. But I limited my zone to only this candle. Can you tell me what is the reason? Okay, you may say risk management. Okay, forget about that. But there is another thing. Have you seen the narrow range happened here? That's why I limited my balanced area, that is the area having institutional order flow. And this is imbalance started. That means before imbalance started, the real institutional order flow is here. If I am drawing a zone up to here, my risk management is very high. Now you see, now I made the risk very limited, and moreover, previously see prices came near to the zone and started moving. That means in this area, strong institutional order flow is there. There was a big rejection, right, earlier? It started from here. Just touched the zone and moved very sharply. That is the reason why still I want to plan one more trade in this zone. If you go to the 15 minutes, you see the candles previously. how sharply prices moved up. Go to 75 minutes, the candle is very clear how sharply it moved. Go to the daily time frame, even much clear. Actually, based on daily candle only, I focused on that area, because I know the real trade is there in this area. By seeing the candle, by seeing this rejection, sharp rejection, I guessed this is the area I have definitely should focus. And a small 5 minutes area, risk is a very small. So what's wrong? Plan another trade today. That is what happened today. Prices entered today exactly in that area. But this time prices reached near to the distal line. It didn't touch the distal line, but came almost close to the distal line. Go to the 5 minutes time frame, you get better clarity here. This is the daily zone. So that means prices almost reached the daily zone. Below that some more order flow is here. If anybody don't want to trade outside the zone, if prices enter this daily zone, then only you want to take. If anybody, so because sometimes we are very strict, we don't go outside the daily zone. Or if it is 75 minutes, we don't go outside the 75 minutes proximal line. If anybody are planning like that, still you would have got a trade. Maybe your risk is might have been reduced to very small. Still prices touched the daily proximal here. The black color what you are seeing, the daily proximal, and then sharply prices moved and finally reached the 15 minutes target. See, continuously they were moving. They created rally base rally, drop base rally. Prices were further moving. No turning down. Continuously moved up until it reached the 15 minutes target. Here we have a 15 minutes target. We have a rally base drop. And finally it reached and target somewhat pushed the prices. Okay. But finally here it reached. When we got the trade, you got the trade at 5 minutes, candle 10 o'clock 5 minutes you got the trade, and when it reached 11 o'clock 10 minutes it reached the target. Almost 1 hour or 1 hour 5 minutes. Your trade is completed. How much profit it has given? You might be wondering, majority of the trades today happened at 10 o'clock. 10 o'clock 5 minutes or 10 minutes. You know the reason? All the high liquidity zones, prices reached at 10 o'clock and all the high liquidity zones pushed the market up in all those stocks. Exactly same time market is also, maybe the impact will be there all these stocks, because some of these stocks are as part of the Nifty index. National Aluminium is there, Grasim is there, Canara Bank is there, Adani Enterprises is there. So obviously what happens when the order flows, high liquidity order flows pushes the prices, obviously our Nifty index value also might be improved somewhat. Maybe I'm guessing, maybe I might to observe Nifty properly. From 10 o'clock it was started moving up or not, let me check. So Nifty also see at 10 o'clock started moving up. There is a fine-tuned 5 minutes area here for Nifty. From there they were started moving up. So that means all our high liquidity order flows executed at the same time. Okay, now we are watching the National Aluminium. So National Aluminium, how much profit it has given? It has given 27,450 rupees profit, which is 13.1% ROI as per one futures margin cost. Huge profit, National Aluminium. Price action clue? Rejection. Strong rejection. It is not rejection. It is a strong rejection. This rejection gave me the clue. This is the area strong order flow will be there. Strong order flows push the prices to the maximum extent. That's why 15 minutes order flows. Also institutions knows, actually they are the people keeping their order flows. They knows. That's why they are ensuring their target zones also a little far so that maximum profits will be grabbed here. Understanding institutions' mindsets also important. See, they didn't create any 15 minutes order flow after that. So direct passes, nothing is impacting, directly moving. And here they might have kept a strong order flow. Probably here they are selling their, booking the profits. And here again it resisted the prices after some time. So this is the way National Aluminium has given a good profit. And the next one is TI India. TI India is also a daily high liquidity zone. We didn't have any price, came close to the fine-tuned area. Here we have two 75 minutes zones. Second one is not having any order flow. First one we have fine-tuned 5-minute zone. How I fine-tuned, let me explain. Here we have a drop, 3 base candles and a rally candle, follow through candles. And here also you have a drop, base candle and a rally and follow through candles. Next, go to the 15 minutes time frame. In the 15 minutes time frame, here you have a drop, base, rally. And here the structure is not good. 15 minute structure. See, you have a drop, all these are all base candle, 1, 2, 3, 4, 5, 6, 7, 8. So that's why I didn't focus on this particular stock. So within this 15 minutes area, we have a fine-tuned 5-minute zone. So here you have a rally, 2 base candles and a rally candle. So this is the area we want to plan our trade. But today, prices came very close during the last closing hour of the market, but not very close. Even if they came inside also, we won't take trade, because this is almost the last half an hour of the market, last 30 minutes. But the thing is, see, the stock prices are falling. But where it stopped? When they are reaching this fine-tuned 5 minutes area. The reason, this is the area institutions kept a huge order flow. Okay. Next one is IndusInd Bank. Yesterday we discussed. This is a daily high liquidity supply zone. We didn't get any trade because I already explained how I fine-tuned yesterday. I'm not going to discuss this. Next one is Conquer. Conquer is a 75 minutes high liquidity zone. We know this zone will be violated. Why this zone will be violated? Because it is having all the order flows already tested. Go to the 15 minutes time frame. We have 2 order flows here. Sorry, 5 minutes order flows. 15 minutes only 1 order flow. We have a drop, 2 base candles and a rally. And we have one order flow at the proximal line and another order flow at the near the distal line. Go to the 5 minutes time frame. See here you have a drop, 2 base candles and a rally. And it is tested. Tested and moving up again created a rally, base, rally. And that is also tested. Prices went almost close to the distal line, touched the distal line. It didn't cross, it is not pierced, but exactly distal line it touched and then moved up. See today what happened? All these order flows easily violated because they are tested zones. We already learned in lesson 16 when a zone will be violated. That way we are in a position to tell this zone will be violated. And next one is Hindalco. This is a 75 minutes high liquidity supply zone. If we would have identified this stock yesterday, see, huge profit. But anyway, okay. Rally, base, drop, 2 base candles and a drop candle. Here imbalance started. That way software identified the imbalance. Immediately it considered as a rally, 2 base candles and a drop and follow through candles. And this one we fine tuned with 15 minutes time frame. In the 15 minutes time frame, we have rally base drop. This may be a high liquidity zone. Why? Because again rally base drop. See here, LOTL zones are created. Multiple times this zone will test if it is a high liquidity zone. So it is having a fine-tuned 5-minute zone. Look into the fine-tuned 5-minute zone. We have a rally candle, 1, 2, 3, 4 base candles and a drop candle. Prices went into the zone and again tested, came down. And yesterday also, you see, prices entered into the zone, just tested and again came down. Again rally base drop is created from this zone. That means they might have added a new order flow here. Sharply prices came. This is yesterday's price action, 9th. See, yesterday, if anybody would have taken I don't know whether this stock was there in bearish trade setup stock. Suppose if it was there in the bearish trade, please check the reports. Yesterday, you would have got a trade opportunity in this stock. See, today it reached the 75 minutes target. See here. This is the 75 minutes demand zone. Yesterday it gave an entry and today reached the 75. How much profit for short-term traders? Let's check whether this is there in the DIT trade setup. The stock was there. But anyway, it's a powerful concept. Hindalco has given. But today prices did not enter into the zone. We didn't get any trade opportunity today. So these are the high liquidity zones identified from the previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.